let's go out to the platform and play with our Fibonacci numbers here a little bit and show you some different things. So here we have Cisco, and I'm going to just get rid of some of this stuff here, get it cleaned up a little bit. Now, first off, we were talking about retracement, alrighty? And here we just have a 2-day, 1-minute chart of Cisco. Let's just play with this a little bit. First off, if I take the retracement and I click on this, and I go from the highest high, and I don't think I'm grabbing it there. Come on. There we go. Hello. I go from the highest high to the lowest low. Let's just start with that. Let's see what happens. Okay. Well, this one isn't all that exciting. Okay. We can see that it does not go down here and touch the 61.8. It does sit along it, of course, or a little bit there, a little bit around the 50. Seems to like that 38.2 in here. Comes back up and sits on the 23.6. But now I'm just randomly pulling this. The real run yesterday was, of course, from the high to the first low, okay? And now we start to see why the stock was weak, okay? It ran down to here, and it could not achieve more than the 50% level. This may have been a signal as it broke back down through the 38 to get short right about this neck of the woods. Would you guys have been happy to get short there? Sure. Alrighty. Again, if we were to go from this last run, from that high to the close of the day, alrighty? Well, now we have to do a little work doing some projection to find out if this thing could possibly get us further, alrighty? And it's too big of a run, I think. Oops, pop that off. Come on, you can do it. Okay, so the next question is could we have predicted this? Well, certainly we know that this low of the day here and the closing price was going to be some sort of a resistance line once we had the gap down, okay? So now what can we do? Could we go the other way around and go from the low of today to the high so far? Sure. Now, where would I want to get short at? Well, I wouldn't want to get short until I broke through the 38.2. So I might get short right here, and I'm instantly popped out, and the thing comes back up. But I might also get short again over here, and by the way, I'm still making money. Now, that doesn't work every time. That's why you have to be consistent with these things. Now, unfortunately, this platform does not let us draw multiple Fibonacci's on at the same time. So I'm going to ask you guys one of you guys to pick up a piece of paper, and I'm going to call out some numbers to you, and I'm going to show you some overlaps. You don't have to do it right now. Just get ready. Let's go back and look at a little bit more time. Let's switch this thing up here to 10 minutes and look at the last 10 days and see if we can identify specific runs, because this is singly the hardest thing to do. Alrighty. Certainly, can everybody see, looking up here at the screen, that we had a fairly clear run from 4.2 to the top of 4.5. That was basically an unbroken run. So that one's fairly easy to spot. Let's do that. Let's go from the low of 4.2 to the high of 4.5 and see what levels come up. And Yahoo, what can I tell you? We pulled from here to here, and the thing comes down and sits and runs right along the 50% line. It breaks, it goes down, it comes back up and hits its head on a weak 61.8 and starts to sell off. The next day, it gaps up, okay, and it immediately stops at the 61.8, but when it breaks it, we get a shot all the way down to the beginning of that support line again. You ready? So let's take an intraday. Now, Needless to say, on 4-8 here, we can see that we had a fairly good run from beginning of day to end of day. Alrighty? So what happens the next day? Well, the thing comes up and it only gets to the 50% line and starts to fall off. This might tell us to go short at somewhere under 24.28, which is under the 38.2. Okay? We knew it was so-so right here, but when it started to sell off, we started to lick our chops and start setting up our plan that if it goes below 24.28, 24.27, we would get short. And sure enough, the thing goes down and at the end of the day closes right back under here at the 23.6 line, 24.16. Now again, Cisco isn't the most exciting stock. That's only a 12 or 16 cent move, something like that. But you can see how this might work out to your advantage. It gives you logical ideas. Let's look at yesterday. Yesterday, the thing opened up and closed way down here. Okay, and we can't get a projection on this. I don't think we can. Can we get projection? Yeah, not showing them. This thing had the ability, their last update, they've cleaned it up a little bit and they took some of the projections off. Okay, let's take the run from the high of yesterday to the low of today. Okay, and we can see that the thing has come back up. It did never achieve the 38.2, okay, and started rolling over. We could have gotten into a short a little earlier. Now this one doesn't specify what that short area is, alrighty? But again, we could look from here to here and blow it up and see that once the thing started breaking down through the 50%, okay, past the 38.2, we could get short right in here and still have a pretty good run. Now I can make that bigger, of course, by, you know, let's see if I can zoom in on that. There you go. And you can start to see it a little bit more clearly. Okay, so once again, once it broke down through the 38.2 right in this neck of the woods here, we could comfortably get short, that becomes our stop loss, and we start to see the trail off. Alrighty, now let's do some multiple time zone here, and let me put this thing back on full view. We'll go to a different stock, go to a little longer time. And now we're going to need you guys to write down some numbers for me. Okay, I'm going to start over here on the left, and we're just going to plug in some things, and you're going to write down some numbers I call out, and then we're going to do different time frames and see how often these numbers come up. Okay, so let's go from the highs to the lows on the first 3 days, and if somebody will write down $22.84. I'm looking at the 50% line, okay, but they're not going to be the same percentages, so $23 even, and of course $23.59. Okay, then I'm going to take the low from here and run it up to the high on the 29th. Okay, and let's see what we get. We get $23.54. Okay, and we get 2303 actually, and 2281. And then last but not least, let's go from the high to this recent low down here. And our new numbers are 2320, 2359, 2382, 2401, and 24.20. Now, as you look down your list, are there any of them that are plus or minus 2 or 3 cents?
23, 359.
Okay, 23 was one of them. Okay, what was another one that was real close?
23, 54, 59.
54 and 59?
That'd be the same or what? Close enough?
Close enough, right in here. Come on. Extend out there. Okay, what's another one? 22, 84, and 81. Maybe somewhere right in here. Come on. Okay, well, there's 3 of them. Now, as you look up here, guys, we just pulled 3 or 4 different runs, picked up a couple of odd numbers, and found that they were plus or minus 3 or 4 cents, okay? Are these significant numbers? If we were just to draw in our own lines, and I could actually draw a straight line for you, okay? Do you guys like this one with this little bottom here and these little 3 tops and this guy right here? How about here where it sits right along here for several hours and then becomes an open and breakthrough right there? Now, it hasn't returned to that number, and it's also a round number, okay? How about the 23, 54, 59 zone? We pick up these tops right in here, here, this low here, and it is the resistance today, okay? So again, just by looking at these things, as you start to play with it, now I certainly want to, because of where price is, I want to be mindful of that 23 and that 23.54. Those are going to be very important numbers tomorrow.
And what about you draw a line on where there's those strong 3 tops?
Sure, at the $24?
Yeah, well, just under the 20.
Sure, but I can draw lines anywhere. But my point,
I'm thinking it's the 2382.
23.82, did that turn up a couple times on your fibs there?
Well, no,
Yeah.
but once,
But once? Okay.
you know, that's when you started getting higher.
Right. Well, what if I drew from this low to this high here? Oops, don't draw. Fib. We draw from this low here to this high here. Well, it comes out pretty close to that one. Are you ready? Or if I draw from this high down to this low here, it comes very close on 2 of them there. So yeah, that's probably a very important number. Okay? And it certainly is
Those would be potential support and resistant numbers to
very strong potential support and resistance numbers.
see who's going there you'd be working on.
Yeah, once again, if I was long and I was coming up to this 23.56, I was going to say, I'm going to take my money off. It's going to have to really break that 23.56 area before I'm going to get back in, because that's going to be a strong overhead resistance tomorrow. Okay. Now, something's going to have to make me want to take it long tomorrow. Obviously, you guys can probably guess from Cisco, the market's going down right now. Okay. So this is a little bit about fib. Let's get rid of these lines and we'll put some other things on here. Alrighty, another thing we talked about were fib fans. Alrighty. And what if I were to draw a trend line up through these 3 right here? Okay, and I just go like this out into the future. Okay. And yes, let go. I thought it was supposed to do it for me. There we go. Let's try that again. Okay, so I'm drawing from this little green guy to this red guy into the future, okay, and then it automatically projects these other fans. Well, it kind of picks it up here and picks it up almost perfectly there. This one doesn't really pick up much, but you can see this 4th one down here, we did have a bit of a trend for a while along it. Again, guys, it's not perfect. You ready?
That could be a pioneer there.
Yeah, these could be pioneers, and this, wow, that'd be a real nice drop down into here. Let's get short. Alrighty, so, and of course, last time I worked this thing, if we drew from here to here, now it doesn't draw them upside down. Again, I drew from down here to here. It picks up this top right here and this top right through here, okay? The last one we talked about were timelines, and that's this vertical fib. And again, if I describe a high to a low, okay, it puts in some timelines. Now that's kind of interesting, isn't it? All I did was draw from here to here already, and it's showing us this break off right here, the flattening and the break shoot up there, the gap up over here, kind of in the middle down there. I don't know what that tells me, okay? It's certainly fascinating, but I don't know that I could make a trade off of it.
Well, it's sort of like potentially the statistics and stuff where it's showing you where it's changing direction, right?
Well, that's what it's, yeah, that would be a good one, but I mean, it does change direction here, okay, and it does change direction here without a fib line. So again, we have to watch out for what we call conservatism bias. If we believe something, then we look for it, and we don't look for other things. Yes?
Now on the time, wouldn't you necessarily would be for the future, from the swing high to the swing low of today, so it projects out to where you might possibly look in the upcoming time? Because
Sure.
what's already happened is...
Sure, I could take it over here. Well, let's go back to a smaller time frame. And it looks like we have to do a quick refresh here. Let's go back to a smaller time frame where we're only looking at a couple of days or a day. And you're suggesting we go swing low to swing high?
Well, isn't it supposed to predict at what time in the future you might want to be looking at to enter or exit a trade? Because
Okay.
if it's already happened in the past, what
good does it
time
do us?
interval?
Right. Well, here we go. Okay, we chose the swing low, swing high of today, and you can see that about 1500, something should happen.
Is when you might want to look for something to happen to.
Okay,
Yeah.
and that may be one way to use it, people. That may be a very good way to use it. Again, I admit my lacking on fib timelines because they're not part of my life. I don't know how many lines I need to draw.
As a projection to the future.
Well, you might want to go back in time. Okay, you only have one day here. You might want to go back and look 2 or 3 days back.
Okay.
Okay, and see if you can pick up some higher or lower numbers.
We'll go 4 days.
And the answer is no. Okay, you're at the lowest low, so you have to go back further.
Okay.
You have to go back weeks.
Okay.
Now you can only go 10
days on that one.
well, you go up to 5 minutes or 10 minutes, you can go back to 30.
Okay.
So if you go to the 10 minutes, you can certainly go back
Not
to 30.
5 though.
I don't know, give it a try. So you can go back to 30.
Uh-huh.
You can go further,
Well, let's try 11. I like
No.
that number. No.
still not far enough. Like I say, you may actually have to go back months because we've been in a rally.
Okay. Okay, let's try. 20? Well, 20 I
Sure.
can get on the other one. On the historical. No, I can't. Yeah, I can.
Nope,
Nope.
not far enough.
Okay. Then we're just going to take it historically. Go 2 months.
There you go. So now you got some stuff below.
Okay.
So what if you were to pull from the low to the high?
This low here. Wait a minute, let me get them. This low. Okay.
Aha, how about that?
Huh.
Sits right on there, and your price is 21.80. Okay?
Now, will it, because it's going down, basically it should be,
So if the red line comes up, that means momentum is to the upside, and you certainly wouldn't want to go short then.
right?
So what you want to see is it not cross. It will not, if it does not, if it hooks back down, okay, and then, see, the red line crossed above right here, the gray line, and it started to go back up, but it crossed back down. It doesn't have to go up, okay?
To do nothing until the 20, until it does
Well,
something.
that's a long indication. You
That's
have
a
to get,
long.
you have to get the rules in your head. If you're thinking long, you want to see the red above the gray going above 20.
Okay,
If it's not doing that, then it's not a long. Now the next question, is it a short? Okay, well, it's a down day, alrighty. And what is the rest of the market doing? We don't know. We have to look at the other things, okay? Now, it's crossed above, already, and guess what? Price will probably going to break your trend line, which
good.
means you can't
It
go
just
short.
did. One iota
See?
of
Hey,
red.
it works. It's just that you got to get it straight in your head what it's telling
Right.
you.
Okay,
Okay, so this saying price is going to go up, you drew a trend line saying price is going to go down, and price broke the trend line.
Okay.
These are in sync. They're telling you the same thing.
what is the other indicator, which was?
MACD,
MACD.
Well,
Never
we can do
worked
that.
MACD either.
right click, go to properties, go up to studies, volume plus, change that to MACD with signal.
Might be under M.
Yep. There they are.
Okay.
Now this
That's
is,
it.
that's it. Now it's under 0, okay, and the MACD line is right with signal.
And it's
It hasn't really cleanly crossed.
almost there.
So right now MACD is telling you that price is still going down, but it's not going down very fast.
Okay.
Okay, price isn't going up until MACD gets above 0. Okay,
Okay.
so now we have a little bit of a conflict of interest, don't we? We have,
All right.
it's working perfect. Okay. Now I don't know if that helps your trading, but it's working perfect.
Okay.
Okay, I don't.
This is
Again,
good.
I don't know FMT, but you know,
I just picked whatever.
you don't have much of a range in stock in here, you know, either.
Okay.
Let me see if I can stand back up.
I have that problem too.
Yeah.
I think I have a pretty good one here. I have two charts with my biosite and that head and shoulders pattern.
Mm-hmm.
So I put the low and then the high, and things really came out
Pretty good. Yeah. Isn't that amazing?
Yeah. So I wrote down what the prices, what the different prices were, and I thought that this half point was a support line, which would be around 37.50.
Mm-hmm.
But when I look at it right now, like, it looks tempting, but I don't think it's done going down. I've got kind of a longer picture, but it's definitely hit resistance at 39.
Mm-hmm.
It just
I
kind
mean
of,
support.
well, it looks like resistance to me. It keeps.
I'm
coming up.
sorry. I was looking at your crosshair.
Oh, right.
Yeah. Okay.
That's
yeah.
right. That's at 38.58,
Mm-hmm.
and that's pretty close to what the Fibonacci was at 38. That was the support line.
Mm-hmm.
But I was looking at maybe if it crossed down here, then that would be worth a buy, 38.70, and then.
But it
maybe-
also might be worth a sell at 39 or 38, 30.98.
Right, definitely. Oh, you mean selling it
Yeah,
now?
selling it short.
Selling it short.
And then buying it back at there and buying long at that point.
Okay. You see, I'm used to thinking in one
Right.
dimension. I would love to be able to sell short once in a while.
Well, you get your chance here.
And then looking at, I was taking this trend line here, and maybe looking at it as a way out, or selling half when it got to here, and then the next ceiling at 42. Let's see. Well,
You're fairly ambitious. I mean, this isn't going to move that far.
It's not going to move
No,
that far.
no.
No, not in a day.
Not in a day, so.
Yeah, I'm thinking more like, a couple weeks maybe. So, but I don't know how else to.
Well, you did a very good job, you know.
I love the way that it fit out on
On the
That's
fib, yes,
beautiful.
that's wonderful. Scary,
it. It is.
like I say, yeah.
Yeah, it hit here and it immediately came down. I don't think it's done going down. It's definitely, you see how it's, it's a San Diego company.
Is it?
Yeah.
Hmm.
So 4,000 employees. And now with this to you, when it's not giving you a signal, is it?
Well, signal is not above 0 yet. MACD is above signal, but it's not above, they're not both above 0.
But you
so
don't wait for the signal to cross the MACD
it did.
over here.
If you're are you
Crossed
thinking
on-
long?
But
Tell,
I mean,
tell
it
me what you're
needs to be
thinking.
flipped for it to be long.
No.
Oh,
MACD on top of signal and
Is long.
above 0 is long. So you got to make sure you get these.
I know. That's why I don't like to
Okay.
use it. Above,
on top of signal
Signal.
and both above 0
right, is a long.
is a long. And then when it crosses over up here, this would be a sell long.
Okay.
When MACD crosses under signal and above 0, that's a sell long.
Okay.
When MACD crosses is under signal and crosses below 0, this is a sell short.
Yeah.
Okay? When it crosses back above, it's buy cover.
Gotcha.
When it gets up over here and both of these are above, it's already on top of it. When this one comes above, this will be a buy long sign. And over the last 3 months, every time prices come down to support, it's bounced up. That's how we know it's support, right?
Who's bouncing? Yeah.
You know, but who's bouncing it up? Okay, if this price starts to come down here, what if you saw Goldman Sachs, okay, GVRC, and Smith Barney, okay, all lined up to buy $30? Well, historically, everybody believes that 30 is going to be the support. What is support? Buyers. Whether they actually buy or not is irrelevant. It's the fact that there is a lot of demand at $30. So this gives credibility to our level 2. We're watching historically, this is historical probability, but as it approaches down here, if I scroll down and I see these 3 guys lined up to buy on the bid at 30 bucks, I'm going, wow, I'm going to buy this at $30.03. And they're going to support my price. And when they start to buy or other people jump in between me, it's going to push my price up. And if it goes through 30, then I'm simply going to say if they leave or it goes down to $29.99 or $95, I'm going to say I'm clearly wrong. I'm going to take my small loss. So, you know, if I'm going to buy just ahead of them, just like these guys are doing. Okay, market's closed. Here comes a couple of trades through, 65,000. Okay.
Purples are the panic ones?
No, they're just aftermarket things. Some of the dark purples are transfers, okay, and they will not be adding to volume. The light purples are after hours trades on this platform.
Now, if you see a long candle at the very end, that usually means people are buying cover at that point, or
Well, on a down day, a big green candle at the end would be pretty much a short covering rally, yeah.
Okay.
And on an up day, it would be a big red candle. That would be people taking profits off the table, selling long. Okay. Strange as it sounds, I know we've been telling you guys this for the better part of a week now, but most people are day traders, the professionals. They don't carry things home overnight. They take their profits off the table and sleep well at night.
On the dividends,
Mm-hmm.
before the payoff of a dividend, a week or 2 before, does it usually climb up the stock?
No, well, it depends on the stock. I mean, there's some people who are like me, who play dividends, but the ones that are paying 5, 6, 7%, they do climb. But the other ones that are, 3, 2, 3, 1%, 1.5ers, nobody really works those that hard. So, you do see a little bit of a climb up in them as people anticipate the dividend date. But again, it's certainly not weeks before. It's usually a couple days before.
So after the dividend, does it topple down or it stays about the same?
Once again, ex-dividend, the day after the dividend is paid, generally the stock will fall approximately the price of that dividend. So you need another day or two to let it come back up to normal, and therefore you're getting out at the same price you got in, or maybe even a little higher if it was good news, because one of the dividends released, usually on their earnings date. Okay.
Good time to trade it too, isn't it?
Sure. And then there's 7 different positions that you trade stock splits in. You got to know all 7. The announcement day, 3 days after the announcement, 2 days before the split, 2 days after the split. You know what to do depending on the kind of splits. There's 7 different major plays in just stock splits. That's a whole nother course.
Yeah.
That's a whole nother course. Alrighty. Any questions on any of the material we've covered so far in class officially? How's that? Before we get off on dividends and Forex and everything else. Okay. I want to talk to you guys again a little bit about your trade plans and building this thing up as a business. And we're going to finish the day talking about 10 survival skills for the DAT trader. But before we get into this, I want to go back and show you a couple examples of different business plans, how to build one, and talk a little bit about it. These things are in the day 1 of your 4-day book, okay? And you don't have to pull them out right now, but I'm going to pull them up here on the screen for you. Now, the first thing is that there is a handout in here, and we'll just put it up here on the screen real fast. I'm not going to read it to you or anything, but I want you to see it so you understand what it is. It's called Developing a Trading Plan, and then put that plan on paper. A written plan does 2 important things for you. It forces you to trade within defined parameters, okay? And it is a way to measure your progress and more importantly, your discipline. Guys, you've let yourself off the hook too many times. You say, well, I'm going to get out of this if it goes down a quarter. But you don't write it down. It's not a defined plan. So when it gets down a quarter, you say, well, I'll give it another nickel. What's another nickel? Okay? It's a breakdown in discipline. And that lack of distrust that you're building in you, okay, is going to cost you a great deal of money later when it's important that you should have stuck to your discipline. Yeah, maybe a nickel isn't much. But what if one day you allow it to go $5 against you on 1,000 shares and it costs you 5, 10, 15, 20,000 bucks or destroys your entire account? Trade plans and business plans are very, very important. And we try to give you guys the tools. It tells you how to write your trading plan, okay? The first thing you should do is describe your trading philosophy and general goals, okay? You don't have to be a rocket scientist to do this. You need to sit down and open up a Word document and you type at the top, my trading plan, Rev 1. Now you're going to have hundreds of revs by the time you die as a trader, but you got to start somewhere. And you type down and say, hi, my name is Mike. I want to be a swing trader. A swing trader uses a lot of charts, and I want to make about $300 a day in the next 6 months. Is that simple enough? Okay, we did a tremendous amount of work there. I defined my style as swing trading, and I know that I'm going to have to study charts. So does that not ask the next question? When am I going to study charts? How am I going to study charts? Which charts am I going to study? Do I have to read any books on technical analysis to help me study my charts? Okay, do I have to have access to a charting program of some kind so I can go out and fool with my charts? Yeah, so by stating one goal, it starts to beg a series of questions of how am I going to achieve this? If I'm going to study charts, when? Oh, okay, now I write my next rule. I'm going to study charts Monday through Thursday from 7 p.m. until 8:30 p.m. before dinner. But I'm busy, I got a lot to do. Oh, I am going to give up Oprah reruns and not watch any more Law and Order reruns. Oh, no, I can't do that.
Okay, better 9 to 10.
Yeah, make it 9 to 10, watch the Law and Order reruns. Okay. So you understand what I'm saying is that you start to set up yourself a discipline. And if you don't do it, then you have to become accountable. Okay, Tuesday night, I didn't do my homework between 7 and 8:30. What is that going to cost me? Well, if you let yourself off the hook again, just like you did when you let yourself off the hook on that nickel, okay, then you've learned nothing. So part of your plan is going to have to say, well, every time I break one of my rules, I will give up my favorite dessert for a week. Or I will take a $5 bill and I will put it in a glass jar and I will give it to a charitable cause. Not of my choosing, not of my denomination. I'll give it to the church across the street. But I don't go to that church, I go to another one.
I won't date my mistress for a day or two.
I won't date my mistress for a day or two. Maybe we shouldn't say that on tape, okay? But do you understand, people, that if you are not accountable, then you're not ever going to be accountable. And the only way you're going to have discipline in your life is to discipline yourselves. I can tell you, don't do this. I give you 10 good reasons last portion of the class what to do and what not to do. But after a couple of months of live trading, virtually every student walks in here and they go, Mike, I'm not doing well. And I go, let's pull out your 10 laws of trading. And they go, well, I broke number 1, and I broke number 2, and I broke number 3, 4, and 8, and I think I touched number 5 in the dark last night. Okay, it's amazing, and you look at them, you go, do you understand that trading is difficult if you do it right? Okay, what then if you don't follow the rules? How successful can you be? Trading is not complex. Trading is simple, but it's not easy. And there's a very big distinction between that. What hurts you? Does the market hurt you, or do you hurt you? You hurt you. So you got to start training yourself not to hurt you anymore. And that's part and parcel of what I'm showing you up here. Now let me show you another example. Now that was the how-to. Here is an example. It's not the best, it's not the worst. But obviously you're going to see that this student made a very, very sincere try. Here is his plan and schedule to develop the development of securities trading knowledge, skills, and ability. Okay? He has a very nice table of contents. Do you have to have a table of content? No. Okay? The purpose and scope of what he's trying to accomplish, his goals. Now this one caught me a little strange. Background and objectives. People, I don't need your resume. You don't need your resume. Don't you think you know who you are? But maybe he wrote this down to remind himself of what it took to get his different certificates, his bachelor's degree, who he is. And maybe that helps him, okay? Here are some of his objectives, his plan maintenance responsibilities. When is he going to update the plan? Commitment and resources, what he's going to fund with, his plan definitions. I'm not going to bore you to death. This guy really gets carried away. Some of the stuff, here's his core stocks. Okay, how about this? You know, here's his daily work process and planning flow chart. Okay, and obviously this guy was some sort of a planner, alrighty. And this is one guy's take on how to build a plan. Now, if you guys build these, me in your case and OTA instructors in the general case, we'll correct them for you. You send them to us and we go over them and we put in commentary and we try to help you guys. But we can't help you if you don't send us anything. If you don't even start to write the plan, then we can't help you plan the plan. The hardest thing about doing anything, whether it's trading or starting up a Ben & Jerry's ice cream store, is what? Getting started. Taking that very first step and doing it. Now there's a couple others in here. I'll just go real fast through here. Here's one that another student did, and you'll see a completely different take on his point of view. He did it in an Excel spreadsheet, and here he has his trading plan objectives. He went in here, activities to reach objectives, his timeline to do it, the date he was going to initiate, the budget, and this was for simple things like setting up his office, getting his cable and ADSL lines up, getting his computers organized, okay? When was he going to start doing his live trading? When was he going to come back and take the OTA course again for free, okay? When was he going to take another course, and how was he going to budget for that? Then he gets into his trading plan, and he put all his fees and schedules so he knows exactly what his costs to trade are going to be involved. ECN order routing, etc. Then he has his day trading plans. Guess what, guys? He listened to that lecture we talked about on doing our R1s, R2s, R3s, and this is how he's going to track it, okay? He has things on gaps and how was it ever filled, how long did it take to fill, what indexes are going off. Does he have any trend lines working? What is his RSI and MACD? He didn't like stochastics. He liked RSI and MACD, okay? He has a whole thing here ready for his different trade strategies. If we break R1, we'll go long with a stop 10 cents below R1, just like you and I talked about earlier this week. He has his trading log, his entry, his exits, his stop loss, how long he was in, whether he was long, whether he's short, why he took the trade, his pre-trade analysis and post-trade analysis. He then has a sheet in here so he can track his tickets, commissions, ECN fees, and other fees, so he has a running total cost. He has his general rules, okay, and his daily trading rules, okay? And because this gentleman happened to speak Spanish and had a little bit difficulty, like some of you do, with the bid-ask, he put the entire flow chart of bid-ask in Spanish because it was easier. Can I print it for you? I told you all you should do is ask me by email and I'll digitally send it to you. Okay? And I still make that offer. All you have to do is write to Mike@tradingacademy.com and say, Mike, would you send me everything on trade planning? And I just click it in and send it right back to you. Okay? But it's already in your books. Again, trade planning and planning. A student said, well, Mike, all I have to worry about is commissions. No, you don't. You have to pay for the cable hookup. You have to amortize your computer. You got to pay for the electricity to feed the computer and the monitor. You got to pay for the pencils. You got to buy yourself a new mouse occasionally. All that is part of your trade. If you were running a business and you were making cars, would you have to buy steel and copper wire? Sure. Would you have to pay laborers to go out and twist nuts and ratchet bolts? Of course you would. Well, this is a business like no any other business. You've got to be able to account for all those things. Tomorrow we're going to spend a lot of time talking about how to run it from a legal point of view. We haven't talked about taxation yet. Your CPA is a capital gains CPA. He probably doesn't know how to really properly get the best tax benefits and advantages for you as a trader in securities. We're going to talk about those things. Alrighty, let's finish up today though. We always try to give you a good healthy dose of risk management. At the end of the third day of the first portion of the class, we gave you the 10 laws of trading. Thou shalt not do this, thou shalt not do that. Wanted to kind of revisit it, but in a different way. Some of them will sound similar, but I want you to think about them in a different point of view. So we're going to talk about 10 survival skills for the direct access trader. The first thing is that we have to make an assumption that we truly understand the difference between trading and investing. And as I had already noted to you guys, some of you still have, not surprisingly, lingering investment baggage. All your lives you've been brought up listening to your parents, to your teachers, to your televisions, to your newspapers, telling you what they think is the right way to do it. But until you came to this class, most of you never even got around the idea that these people weren't trying to help you. They're not. They do everything for their benefit. They don't know you. They're not your mother. They're not your brother. They're not your father, your sister, okay? The guys at your favorite bigbrokerage.com, whatever it is, they don't know who you are, and nor do they care. They only care about your money. You should care about your money, and you need to take care of yourself. So you have all this background knowledge that it's very hard to get away from and make that mental split that we are no longer buy and holders, that we are no longer of the investment ilk. We are traders. We are merchants. Some of us are fast merchants. Some of us will buy inventory and turn inventory over very quickly, within seconds or minutes. Others of us will buy inventory and turn it over in the course of a couple of days. Others will buy inventory and turn it over in the course of a couple of weeks. But we still, the whole concept, the whole philosophy is to buy and sell, not to buy and hold. Okay? The only way you make money as a merchant is to turn inventory. You ready? Discipline is doing the right thing at the right time, every time. This is kind of a cyclical game here. People, if you have discipline, and every time, here's an easy discipline. Every time you touch a hot pot, your instinctive discipline will make your hand jerk back. This is a good thing. You tend not to get bad burns. Alrighty? Do you know what it would take to overcome that discipline? To go up there and just put your hand on a hot pot and hold it there without jerking away? That'd take a lot of work, wouldn't it? Alrighty? Well, we want to do just the opposite, okay? I want to get you that jerk reaction of discipline to protect you in trading. I want you to have that instinctive, oh man, that hurts, that's hot, get away from it, okay? Because once you start to know, you won't even approach hot pots. You'll no longer, like the little child, try to see if mommy's right. Is it hot? Okay, you'll just go, that's a hot pot. I'll just jerk away anyway, so why should I touch it? And suddenly you're making good decisions. Why? Because you have the confidence of your competence. If you know what you're doing, you already know that it's hot. There's no sense in reaching out. That competence and confidence allow you to make faster decisions. Pot, ignore. I don't have to think about it anymore. Think how good you guys are as car drivers. You're going down the freeway 65 miles an hour, assuming you're all nice, legal, honest people, and the brake lights go on 500 feet ahead of you. You don't lock up the brakes, but you don't even think about it. Your foot comes off the accelerator and moves quietly over to the brake and just rests on it gently. You don't even say, okay, there might be something changing. You instinctively move it. That's a discipline. Okay? We get you to that in trading, you'll be able to make really fast, right decisions. Good decisions come from confidence. Confidence comes from discipline. Okay? Discipline, by the way, comes from making right decisions. So it then becomes cyclical, like I said. Survival is obviously incredibly dependent on making those right decisions. You can't afford to make too many bad ones, people. You don't have unlimited trading funds. One of the bad things that you'll read in your books is you'll hear about this guy doing this and that and stuff, but you have to understand you're different. A professional trader, he only risks 4 or 5% on any one trade, okay? But he can have 20 or 30 positions. Well, he can have 20 positions at 5%. That'd be 100% of his money. But he also knows that he has more money in the background. Okay? He works for an institution, or he has reserves he can draw upon. You guys, as beginning traders, have a limited amount of funds that probably you have one shot to make a new business work with. You have to be extra careful, okay? Because you may not survive. Number one, we've talked about this already. Don't let losers run. Guys, if you do this the way we've talked about all week, and most of you have done a very, very good job at being able to articulate through a trade, I see this, I believe this is going to happen, I can protect this way, okay? That's great. What if you do all this work and then you expect price to go up and price starts going down? Well, there's only one of two things. Either your plan was wrong or the market is changed. In either case, don't stick around, okay? What does it say? What are you, crazy? You did all this work. If it doesn't go the way you planned, get out. Or don't do the work. I mean, you might as well just throw darts. I mean, why are you going to sit around and articulate, well, if the RSI and the MACD is doing this and the prints are doing that, and I'm going to draw these lines here, and then I'm going to take a trade that doesn't work and stick with it? That's insanity, people. Don't do that, okay? The sooner you know that you are wrong in your trade plan, the sooner you can get out. Now, we talked a little bit about stop losses earlier today. If we make stop losses too tight, we get jigged out and we never find out if our plan worked. That does not mean we should have huge stop losses so that we get hurt horribly every time to prove we're wrong. But if we're buying near support at 30 and we buy at 30.03 and the thing starts to go down, I don't want to get out at 30 because that was support. But I don't have to wait till it goes to 29 before I get out either. Okay, it clearly broke support at 29.95 and it's going to cost me 7-8 cents there. I'm out. Okay, because it broke a technical factor or whatever rule you put in. Alrighty, so when in doubt, get out. Number two, no high volatility stocks. Okay, this is a very, very bad gambling allure. There are a lot of stocks out there that are in the news that are going to move very, very quickly. Okay, during our class, we've seen a couple, Taser and Mags and a couple of these other ones. Very alluring. I don't know what to tell you to do. I mean, put wax in your ears. Don't listen. Because if you see the stock go up $7, you go, wow, I could have bought that. I could have been up $7. I would have had 1,000 shares. I would have had 7,000. Reality is all you have is your hopes and wishes, okay? You wouldn't have gotten all $7 of it. Okay, by the time you even identified it. And then you have to accept that if it can go up 7, it can certainly go down 7. I would have made $7,000. I'd have been happy. What if you lost 7,000? Would you still be happy? You got to be able to be happy to be a trader because you have to be able to accept both reward and risk equally. You can't become emotionally involved with money. You got to be a good trader and trade to make the right trade and feel good about doing so. Money is just how we keep count of whether we're doing it right or wrong. The money is somewhat irrelevant. I say somewhat. Don't let me fool you, kids. I like my money, alrighty? But the point is I don't sit there and go, how much money am I going to make today? It's how many good trades am I going to make? If I make good trades, the money will be there. But if I play with volatile stocks, okay, I may make a lot of money today, but I'm going to probably lose a lot of money tomorrow. Well, Mike, doesn't anybody play volatile stocks? I see players in there. Yes. These are people who have a lot more money than you do. And yes, really look at them. You'll find Goldman Sachs in Taser, but he will only show 100 shares. We saw him today showing 50,000. He wouldn't take that kind of a risk. And he's the biggest of the big. He's got lots of money. Alrighty? Why wouldn't the biggest show more than 100 shares? Because they're not foolish. Now, after 6 months or a year of you guys trading live, you want to go out and you want to play a coral snake, a taser, go for it. But just test yourself. Buy 10 shares, buy 50 shares, and see if you can manage the trade. Don't worry about the commission. Let's just see if you can get in where you want and get out where you want, okay? This will be a really big eye-opener to you. And you'll look back and say, geez, I'm sure glad I didn't do this before. Ready? But just give it a try. Just throw 10 shares on it. What's it going to cost you? 20 bucks in commissions, okay, to find out whether you can trade a coral snake. You ready? And when you find that you have a $100 loser on 10 shares and you go, how did that happen? Okay, you'll start to go, whoa, these things do bite back. You ready? The other problem, of course, as beginners, is the bottom line down there. If it's too fast to trade, it's too fast to learn from. People, you have to stage your abilities up. You know, you got to learn to crawl before you walk, walk before you run, and all that kind of stuff. There's a lot of great tools out there, a lot of great ideas in trading. You've been given a really great set of working tools right now for your competency level. As you get better, there's more out there, trust me, okay? Number 3, trade only patterns. We've been talking about patterns all week long. We talked about continuation patterns. We talked about trend reversal patterns. I talked to you a little bit about patterns within patterns, timing cycles, okay? Things like that, price movement cycles. We looked at, today, we looked at candlesticks, or yesterday, we looked at candlesticks, okay? And harami patterns, and hanging men, and hammers, and star. Those are all patterns, people. We want to find patterns that repeat to some degree so we have a higher probability of what's coming next. We get a feel for it. We can't know it. All we can do is have probability on our side, and with a little luck from the trading gods and a lot of skill and hard work on our part, act upon that pattern. You got a strong bid. Very few sellers on the ask, and the S&Ps are breaking out. People in most tech stocks, a Cisco, an Intel, an AMAT, something like that, 7 out of 10 times that's a winner. If the other 3 times I can make them really tiny, small losers, I'm a hero. Okay? You mean we're going to be able to call the market 7 out of 10 times, Mike? Yeah, right. Feel really proud if you can call the market 5 out of 10 times as beginners. That's a flip of a coin. Generally, most of your emotions will get in the way, and you'll find that 3 out of 10 times is more realistic. But how can I make money? Guys, if I can make a dime once and I lose a penny 9 times, I'm still up for the day. Oh, Mike, what about commission? Don't give me that stuff. If I make a dime once and I keep my losers real small, okay, I'm still up for the day. Start thinking about that. If I only could make 1 good trade, and I had to make 9 bad ones, but they were little tiny ones, could I still be a hero? Yes. Remember what I told you earlier. Wouldn't it be nice is that at the end of the day, you could reach into your pocket and pull out a crisp $10 bill with no strings attached, just for pushing a couple of buttons and watching some colors on a screen. Once you know that you can make that $10 every day, now it's just a matter of scale. Now it's just a matter of magnification. Whether it's in share size or in frequency or a combination of both, or maybe magnifying your education a little bit, getting 1 or 2 more tools under your belt. But once you know you can do it, you'll have the confidence, okay? Once you have the confidence, you'll be able to make good decisions. The good decisions will make you support your discipline, which will start to spiral you up, and suddenly that $10 grows, okay? I just said this one, number 4. Learn to trade for skill, not for money. People, you should all go home and look up in a dictionary the word focus. It means to look at one thing at a time. All ready? You can't be focused if you're looking at 2 things. You can only focus on one thing. And what should we be focused on? Our trade plan at the moment of execution. We can't be thinking about whether we're going to make money or lose money. We got to be looking at our trade plan. If we open our trade plan with 5 reasons, my stock has been trending up for the last 3 days. My stock had good earnings yesterday. My sector has had good earnings all week long. The S&Ps are going above resistance line right now, and Alan Greenspan is smiling. Go long. Okay? Now, what do? I look at these reasons. I stare at these reasons. These are the reasons I have the trade open. I don't go, I wonder if I'll make $1 million. Oh God, I hope I don't lose $1 million. Because as soon as I start thinking about other things, this is why I open the trade, these 5. All I do is concentrate. Alan Greenspan still smiling, go. S&P still above resistance, go. Okay? Sector still in good shape, go. Earnings are what they are. My stock is trending up. Let's do it again. Alan Greenspan still smiling. And that's all you do, people. I know it sounds moronic and it sounds almost stupid, but it's that easy. Pay attention. Oh, Alan Greenspan is frowning. Alert, alert. My risk just went up by 20%. Reason number 5 is off the board. Consider escape. Watch other reasons starting to wiggle. Close trade, when in doubt, get out, get out, get out. Danger, Will Robinson, danger. Okay? This is how you trade, people. You don't sit there and go, I wonder if this is going to cost me $100 or will I make $1,000? You just watch these reasons. At the end of it all, you go, okay, we're out. Did we make any money? We lose any money? It should almost be a surprise to you. Okay? Almost. Now, nobody can be quite that disassociated. But again, I think I've told you guys a story, if not all. When I was on Momentum Securities, we had a student who was out of class for 2 or 3 weeks, and he got into one of these .com high flyers. And within 5-10 minutes, he was up $15,000, people, on a few hundred shares. Okay? It was one of those days Amazon went up, 65 points or something. It was crazy, and he lucked into it. And he sat there in one of these black rocking chairs in front of his screen, rocking like this. And Sherry Ada, who was our Series 7 and risk manager on the floor, she came over to him, and his name was Herb, how about that? And she went, Herb, and Herb said, and she said, Herb, you're up $15,000. Do you think you want to take any profit? And Herb said, and she said, okay, Herb, and she walked away. There's nothing she can do. I mean, certainly when you're winning, there's very little a risk manager can do for you. But she came back. She understood what was going on, and she did something I didn't think she would. She actually grabbed him and shook him. And she said, Herb. And he went, huh? What? He says, you're up $11,000. And he goes, really? She says, don't you think you should take some profit? He said, yes. And he sold it. And Herb went home a hero. Of course, what did he do? He went home and he bragged to his significant other, honey, I made $11,000 today. But people, he was up 15, and 4 of it erode it while he was out in La La Land. He was out buying rock spas and, oh man, I want that new boom box, that stereo cabinet. Oh, I got to have one of those new plasma screens. So we talk about fear and losing money, but it can also be euphoria. You can get carried away with this thing, okay, and thinking, oh man, I'm just so up. I am just so up that I'm down. What happened? Then you'd be surprised. You leave that money on that table long enough, somebody's going to come and snatch it. It's not yours until you close the position and put it in your pocket. Okay? If you're focused on the money, you are not focused on the trade. Bottom line down here. Scared money never wins, people. Part of your trading plan. I don't know how much money you guys have. You got $10, $15, $25, $50,000. Part of your plan should be to say, I expect to lose a little bit of money as a beginner. That amount should be, plug in an amount, 5,000, 10,000, 25, 10%, 5%, 50%. Plug in some number and don't let it go beyond that. Okay, stop trading. If you don't get it within your parameters, stop trading. You're doing something wrong. Okay? If I start with 10,000 and Al starts with 25, and in the first 3 months, being of equal mind and equal intelligence and equal education, we both lose $5,000. Who's more psychologically damaged? Me, I cut my money in half, or him, who's only lost 20% of his money? So obviously I'm going to be the one that's going to, oh my God, I started with 10, I only have 5 left. I wonder if I should protect that 5. You're doomed. You might as well just write the check now. Might as well quit. The other reason that you might as well quit, okay, is because at this moment, you realize things aren't going well. You can build on $5,000 and build it back up. But if you let it go all the way to 0, if you blow your entire account, whatever it is, I don't know what you guys have, but whatever it is, it's really tough to get those ashes going again. As I said earlier this week, think about where you are right now, okay? You guys have made the commitment. You have the purpose of body to want to step out of the herd and become traders. I applaud you. You should applaud yourself. You're different. You have the time that you could get a formal education. You had the money to pursue this business opportunity with, and you have the volition, what do you want to call it, the spirit, to bring it all together right now in this class. How many times is that going to happen in your lives? I don't care whether it's about trading. I mean, what if you wanted to open a Ben & Jerry's ice cream? When would you really want to know about ice cream? When will you have the money to buy an ice cream store? When would you have the character to go out and sell ice cream? Or whatever your dream is. These are opportunities that only come occasionally in your lifetime. So you got to treat it with a lot of respect, people. And if your money goes down very rapidly, you start to find that you're breaking these rules and you're starting to worry about the money, stop. Come back to school. Come back and talk to us. Let's start trying to rebuild you. Maybe you're doing something. Maybe it's a very simple thing. Maybe it's very complex. But there's no sense in what was insanity? Doing the same thing over and over, but expecting different results. Okay? Let's see different results. We've talked to you guys about limiting your amount of stocks. Again, as beginning traders for the first 6 months or so, we think you should have one position open at a time, and that's it. Alrighty? At most, you should learn about 4 stocks. You need to have a strong stock in a strong sector, so when the S&Ps and the rest of the market go up, it goes up. You need to have a weak stock in a weak sector, so when the S&Ps or the general market falls off, these go short. And maybe you need an understudy for both. Okay? But at any given day, we only have one position on at a time. And God help you if you try to go long and short simultaneously. You will lose your minds. That takes a special kind of software up here, guys, to look for red prints and green prints and remember which ones are right for which. Okay? We told you in the 10 laws of trading to have yourself a daily loss limit. Again, I want to revisit that. Okay? Perhaps 1%. Think about this. If you only have $25,000 to start with, 1% is $250 per day. Okay? Well, that's 100 days. There are 20 trading days in a month. So if we divide 20 into 100, that's only 5 months before you're stone cold broke if you don't do it right. Now, I admit that I'm talking about worst case scenarios. Mike, I couldn't possibly lose $250 a day, every day. No, but one day you might goof up a little bit and lose 1,000. That's 4 days worth. Okay? Just that one little breakdown in discipline. Oh, today I'll try 1,000 shares. Mike said not to, but I'll try 1,000. And you get caught for $1. That's 4 days, people. It goes very, very quickly. Alrighty? I also think for the first 6 months, not forever, but for the first 6 months, that you guys should have a daily win limit. maybe 2%. What if you made 500 bucks? Stop trading. I've seen too many people get up there 500 bucks and they go, one more trade and give it all back. It's not the fact that they lost the money, they lost their confidence. They had it, and then one more, and they break their discipline, they let themselves down, and then they sit there and they kick all night long. Oh man, I was up 500, I only ended up with 10 bucks after commissions. That was pretty crummy. That cost you a lot more than the $490 difference, trust me. Okay? If you set yourself a goal of 300 bucks or 500 bucks and you actually make that trade that day, pat yourself on the back, take yourself out, grab your significant other. Now don't spend all $500, but go out and have a nice dinner or a nice lunch, because you do deserve a reward, and more importantly, you need the self-confidence that you can do it again and again and again. Number 7, focus on your executions. Remember, at the moment of execution, every trade is a scalp. Okay, whether you intend to hold it for the next 2 seconds, the next 2 days, or the next 2 weeks, at the moment of execution, always try to get yourself the best price. Always use your best intuition, your best tools, your best skills. Okay? Now, sometimes that does not mean you're going to get a cheaper price. I said the best price. Well, does that mean I'm going to buy it on the bid, Mike? Well, no, not if the stock is going up. Sometimes the best price might be 5 cents higher. But by seeing that and jumping on it, you at least got into the trade and opened yourself up to opportunity. I want you to remember something, guys. Waiting costs you money. Waiting to get out of a trade, okay, waiting to get into a trade, it's going to cost you money. Make a decision. If it's time to get out, don't wait. If it's time to get in, don't wait. The moment you're in, manage your risk. The moment you're in, set yourself up for a decision to get out. Okay? Be prepared. Remember, I showed you on the platform. As soon as we're in, whatever our stop loss is, we want to put that into the box, into the price box. We go to the gunfight. We don't have to go with the gun in here. I'm allowed to pull it out. I'm allowed to cock it. I'm allowed to put my finger on the trigger and walk up to the guy and get closer and closer and closer and lean in and say, draw. Doesn't have to be fair. Okay? Shoot him in the back if we can. Alrighty. The last thing about number 7 here is to remember, people, money is valuable. Don't leave it on the table. One of the weird things about Americans in particular, and people in general, is that we perceive money differently. If I asked you to work all day long and paint all the walls in this classroom, and at the end of the day I gave you a $1 bill, well, first you call me a cheapskate, okay? But more importantly, you'd really value that dollar. What do I mean by that? Well, you sweat and your arm hurts and you're thirsty, you've been smelling paint all day long. You'd look at that and say, well, how could I get a quart of Gatorade and I'm hungry? Can I get a Big Mac out of it? And I need some Bengay or something for my arm because it hurts. How am I going to best use this dollar? You'll really stretch that buck to get the most out of it. On the other hand, you're walking down the street and there's a dollar laying in the gutter with some X on it. Well, depending on the situation, you may not even reach for it. But let's say it's not quite really ucky, it's just laying on the sidewalk crumpled up. You'll pick it up, you'll put it in the bottom of your pocket, crumple it up. When you get to a liquor store, you'll go, oh yeah, I need to do this and that. And by the way, give me a quick pick on the lottery. You'll literally throw that dollar bill away. Wait a minute. Those $2 had exactly the same amount of value. They had exactly the same amount of worth. What was different? Your perception of them. One you worked for, and it must be much more valuable. And one I found, it was found money. It doesn't matter. People, you better start learning to respect money. Okay? Now, when I'm trading, I can squeeze a quarter until the eagle squawks. But in my private life, I'm completely open and generous. I know how to make that distinction. Already? You come to my house, if I got a potato, you got half. It's real simple. But when it comes out here to these guys in the market, you've got to watch, treasure, value, protect every dollar that you have all of the time. They will reach into your back pocket and slip your wallet out and help themselves if you do not. Okay? So learn to respect money, learn to understand its value. Number 8, learn to model yourself after successful traders. Certainly, we thank you for coming here to Online Trading. We put some of the best instructors in the world in front of you, okay? Every one of our instructors trades live for a living. He also teaches. We've talked about why we teach. Some of us have needs. Some of us have too much time on our hands. Mostly, people, I want you to understand that money is not the only reward. Seeing you guys come back 6 months, a year later, and having you say, Mike, I'm making it as a trader. Well, I walk on clouds for the next couple of months. I've done my job. I've done a good job of communicating to you. That's what I look forward to. All righty? But what do you need more? One of the things that was so valuable to me as a beginning commodities trader in the 80s was finding my mentor. Okay? Having somebody I could go and ask questions of that was clearly and demonstrably smarter and better than I was. Alrighty? You need to find somebody like that. Okay? It might be a friend, it might be an acquaintance, it may be one of your fellow classmates here that you need to talk with. Don't be afraid to network and talk about this. OTA obviously offers continuing education, but if you can't do that, people, you have books. I have a book. There's stuff for you guys already to read. One of the best writers out there is Jack Schwager. And he has a couple of books. One is New Market Wizards and New Stock Wizards, where he interviews the best of the best and to ask them what are their trading tactics, strategies, what are their disciplines all about. People, you cannot be those people, but there may be something that you can model yourself after. If you can find 10 people, I'm willing to bet you can find a hint from each one of them that will make you a better trader, even if it's only in a book. So if you can't get a live mentor, maybe you can develop a mentor. If you can't do that, at least read about these guys. Get something into your life so that you can see and start to say, I'd like to be like Mike, and I don't mean me. Okay. Number 9, this is kind of, well, isn't that the same thing? Be teachable. People always keep an open mind. In our classroom in here, we've had some discussions about, well, I think this and I think that. Well, you know, one of the things I got to say to you guys is whenever you're around people that might have information, learn to be real quiet and develop great big ears. You know, you heard the old adage, you know, free advice is worth just what you pay for it. That's not true. Okay? Free advice. Listen to it. Take it home, value it later. If you don't like it, throw it away. Okay? But keep your ears open. If you go out and you mentally argue with people, you may be missing a very, very valid point. One of the funny stories I tell is I was out on a break outside of Momentum Securities, and this guy walks up to me and he says, well, Mike, where do you think the market's going in the next 6 months? And I go, well, I'm a trader. I really don't think about that. He says, no, you must have an opinion. You're looking at all this economic data. What do you think is going on with the economy? I said, no, seriously, I'm only interested in the next couple of days. You know, I don't look out there. He said, no, Mike, you really must know something. And I said, well, okay, if you really want to know, I think that the economy is going to do this because of that, and I know this guy, and this economist is saying this, and I'm looking at the GDP. And I went through this whole litany of things of why I thought the economy was doing better or worse 6 months from now. And he goes, that's not true. And I, what? And why'd you ask? You know, what do you give me a hard time for? You badgered me until I actually told you, and then you tell me it's not true, that I'm wrong? You know, learn to shut up and listen, people. Be teachable. Learn something every day. What's going to teach you more, a winning trade or a losing trade? Losing trade hopefully will teach you more. Here's another cliche, guys. If you lose the money, don't lose the lesson. Okay? If you lose the money, don't lose the lesson. It's very, very important. Okay? Trading is a journey of learning. I've already said it to you guys, I'll say it again. One of the proudest things I can say is I'm both an instructor and a student of trading. That market surprises me every day. Every day I'm intellectually challenged. It's one of the reasons I like trading. It keeps me alive, it keeps me in the game, it keeps me fighting for those answers. Number 10, remember, even the best of the best lose. Somewhere your ego is still thinking that you're going to call 10 out of 10. Your other ego is still hoping you're going to call 5 out of 10. The reality of it is it doesn't matter. If you can call one good one out of 10, and you can keep those other 9 to little tiny losers, it doesn't matter. People, do you want to be right or do you want to be rich? Okay, think about that. I'd rather be rich. Okay, I'm wrong all the time. I say this stock has gone up and it goes down. I say this one's gone down and it goes up. I get up in the morning. Carol says you didn't take out the trash. I'm already wrong. Get over it. Okay, just get over it. Don't go, I've got to be out. You can't be perfect, people. The best we can do is be efficient traders. The best we can do is be efficient traders. And that means we are going to have losers. We're going to have small, efficient losers, but we're going to look forward to losers. Okay, because they are part of trading. If you hold yourself off that I cannot stand to have a loser, well, you can't stand to be a trader. And you've set yourself up for failure. Okay? Learn to accept your losses and move to the next trade. People, that money is gone. You can't whine and cry over it. You'll never see that $100 bill again. I lost it, it's gone. You're not going to get it back from Dell. You're not going to get even with Cisco. It's gone. You have a great vast vista to go out and look for new opportunity. Go hunt new $100 bills. Let go of that one. And you know this to be true. You've seen it in every sports arena and everything else. Tiger Woods shank ones out into the shrubbery. And the first thing the announcer says is, well, if Tiger's going to make par, he's got to forget that shot and concentrate on this next one. Isn't that what they all say? Okay? Got to let go of that one and concentrate and focus on this one. That's what we have to learn how to do, people. Again, a losing trade does not make you a loser. It just makes you a trader. Okay? The final thought here. Kind of let the computer tell you this one. The final thought as the survival series is don't set yourself up for a fall. Realize, people, that the road to success is never a straight line. Now, again, you have a little thing in the back of your head said, I get it. It'll be 2 steps forward and 1 step back, and 2 steps forward and 1 step back. Probably not, okay? It'll probably be stagger, stagger, back, fall down, pick yourself up, stagger, stagger, get hit, wall to the side, okay? It certainly won't be a straight road, but it won't be an organized 2 forward, 1 back either, okay? You gotta be tough to be a trader. If it was easy, everybody'd be doing it. Trading is simple. The first and foremost thing is overcoming yourself. Alrighty, now we have a whole day ahead of us tomorrow. We got a lot of work to do, a little bit more trading to do, okay? But I wanted to finish today thinking about these kinds of thoughts, alrighty? Because tomorrow I want you guys to come in here and say, I'm really going to dedicate myself to building my business plan. I'm really going to look at this trade plan right in front of me that I'm going to trade on right now a little bit more seriously. You need to start dedicating yourself now.